Let's welcome my good friend and veteran trader, Eric here. Most of you are my students. So if you want to know more about Eric's style of day trading, he's a professional trading. I call it professional trader now, not a full-time trader, because he's trading with OPM, other people's money. So if you are a professional trader, means that it's not don't mean it's not that you are trading with other people's money, not your own money. That's why you call professional trader. Okay, so you want to know about him, this is his website, and this is Facebook page. And by the way, if you miss this one, you can go over to the sign up link and you can click his page link from there. Okay, without ado, let's welcome Eric. Welcome, Eric, it's all yours.
All right. Thank you, Thomas. Angie, the audio can hear it. Okay. Okay. A very good afternoon to everyone. Okay. My name is Eric. So I've started my full-time career in forex trading just last year. So I started to trade on with a proprietary firm um about 1 year ago. Okay. So from a no, but as a professional trader. Yeah. So in terms of experience, I started back in 2008, 2009. That's where I started off with forex trading. In fact, I also attempted to be full time at the point of time, but it didn't really work out. So I went back to my corporate world, but I continued to learn, continued to trade until last year when I decided that it's time, and that's where I came out to restart my whole career for trading again. Okay, as for my style of trading, I'm actually a day trader. So I look at forex pairs mainly, but from time to time I also look at gold, Bitcoin, and Ethereum, the cryptocurrencies as well. So these are the instruments I trade. But generally speaking, I will just look at what happened within the day, what's possibly can happen within the day. Then I'll just plan my trades accordingly. Yeah. Okay. I think to make it easy, I will just use pound dollar as a kind of instrument for me to run through how I look at the market. So on a day-to-day basis, when I look at the each and every currency pair, right? I'll look through from you all can see it on the chart. This is a bar chart. So clearly, if you look at pound dollar, there's this long downtrend line where the price has kind of bottomed out at 1.19, and right now it's stuck in the region of between 1.3500 and 1.4200. So that is one chart. But to a day trader, one chart probably won't mean anything. But knowing what the current market condition is, it will be helpful in terms of planning when it comes to the details, right? Okay. Um, Often not. It really depends on the chart itself. Like in the current condition, if I look at the week chart, that's where I can look at a few price zone. That's zone 1, zone 2, and zone 3. So obviously, because price has been moving up, right? The long-term trend, it's uptrend right now, right? But it's stuck in a region. So that's where I can plan based on, okay, I have the 3 different zone. As long as it doesn't flow into the zone below, let's say in the zone 1, generally speaking, in zone 2, if I want to go for any form of big trades, that means I'll size it up big enough, and usually I'll look for a long trade. So that's the purpose of looking at where I should and where I could plan for my trades. Okay, so moving down, the details is really down to the day chart and the H4 level. So clearly, even from a day chart perspective, right? So if we look at the past couple of days last week, it has tested 1.3980 couple of times, right? And around the region, and it is stuck in a very small range. If we look at the current price action, if the price cannot sustain and it starts to go down, I think that's where 1.3785 will be next support zone. So it depends on what the price will be doing, and that's where when from a day-to-day perspective, when I plan out my trade, if I zoom down to H4, if I look at what has happened for the last week itself, so clearly we have a very simple downtrend line, a horizontal line of around 1.3875. So clearly, if the price action is below 1.3875, then the likelihood of price going further down will be high. If the price starts to be above 1.3875, and if the price action keep bouncing off, and eventually if there's a trend line break of the gray color line, then I think the price will have a tendency to go up. So that I think that's where, when it comes to planning, that's how I do my day-to-day planning. Right. So from outlook perspective, clearly pound is stuck in the middle of nowhere. It's stuck at the top side. So if it's not coming down, then the possibility of going up is still there. Right. Okay. Anybody has any questions so far? Am I speaking too fast? Any questions? Feel free to ask. Okay. So there are questions asking about how do you define the zone, and do I do breakout trading only? Okay, maybe I'll answer the breakout trading. No, I don't just do breakout trading. So it really depends on the market condition. It also depends on the volatility of the day or even the week. There are trades that I will be. I mean, there are different ways to get into the market. So picking top, picking bottom is also a possible way, but that's not the only way. So looking at breakout is also one of the kind of piece of information that when price breakout of a certain level, that's where when we can determine the direction a little bit more clearer lah. Instead of when the price is in the middle of nowhere, then it can be a long or a short. Because for day trader, one of the downside I would say, it's because typically we don't use large stops. So 20 pips to 30 pips stop is usually what we do. But if the day itself it doesn't move much, then if you use a 30 pip stop, then if you try a couple of times, then the likelihood of losing money for the day will be high. So it really depends. So if the price is stuck, then we will look for breakout action first. If the price is moving, then I will not wait for breakout action. I'll look for retracement, get into the market as early as I could, size it up. Then once the market breaks up above into a new high, that's where the main action will come in play as well. Okay. Okay. Then regarding the price zone, especially when I look at the week chart, it's really just looking at where mostly the candles are residing. So the line is actually just a estimated zone area where the price is moving. So it's more of a visual. The purpose of drawing all these lines, right, is actually more of a visual guide to tell myself where the price is, what is it doing right now. And when I go down to the detail level, especially when into H4, H1, that's where I will plan for my direction for the day itself. Okay. Any other questions? Okay. If not, I will use another chart to look at. Okay. Topic of the day is to look at the outlook as well as my strategy, right? Okay. Frankly speaking, I find it very hard to say what is exactly my strategy. But if I were to flip the scenario around, what are the typical pitfalls can I avoid? I think especially over the last 10 over years of trading, when I note down all the different types of um, mistakes, error, pitfall that I'll fall into, I think these are generally the three that I will emphasize quite a fair bit, because it happens a lot of time. It happens, um, I think that it's one of the most common scenarios. Okay, so for example, pitfall number one, moving of stops. So if you look at H4 chart, you look at a couple of weeks back. If you look at the first circle here, right? So assuming we manage to get an entry in this zone itself, right? If the stop was planned to be just below the last H4 candle, right, and the price went up, if so it really depends on the individual strategy as well. So for my case, when I go into entry, I will usually add into the position. So like in this 2H4 candle, that's 8 hours for a day. I'll probably be adding quite a fair bit of position into these two candles. So by the time it reaches a certain height, which I won't know how far, right? If I didn't scale out, and if I move my stop, let's say to the end of the second candle, then if I didn't get out in time, then when the market turns around, I'll be stopped out, but eventually I'll be right about the trade, but I will not make a single cent, right? So these are the one of the key pitfall that I will kind of encourage everyone who's looking at day trading, right? This is one of the key things to look at. So when to move stop is actually very important. How you move it is also very important. Okay, there are also additional kind of techniques that I will employ. Because once I get into entries, okay, if I were to show you for giving an example, go to H1. Let me just come back to here. I'll hide the rest of the example first. Reversing. Okay. Okay, so this is the H1 chart. This, if you, okay, if I were to just play with this, let me see, where is my replay sign? Okay. So H4 at the point of time, so when I enter into this, the H4 chart will look like this, right? So this is the area where I did an entry. In H1, it will look something like this, right? So for example, just to make it simple, I went to two entries, right? So the two entries are the green lines. So if I went in here, if I don't get out, let's say at the blue line, then when the market reverse, and if I move the stop here, which is, let's say originally is at 1.3707, if I move up a little bit higher, then I'll have been stopped out by all these candles here. Right. So I think that is a very typical scenario that every especially for FX trader, they will encounter. What's the mindset behind, if I don't move stop, what if the market turns around, I lose money? So these are some of the kind of typical mindset that we will encounter. I think yes, in a way, if we are trading short time frame like myself, if we're trading within the day itself, then the moving of stop sometimes is necessary, especially when the size is getting bigger and bigger as the price is moving upwards. Then if you don't move your stop, you don't get out in time. That's where when you're supposed to earn money, you end up with nothing, or sometimes even worse, negative. All right. Okay. So if you look at the two green lines, if I've used an 18 pip stop in this case, so logically speaking, if I get out somewhere around here, that will be about okay. So the entry is 1.3725. The exit is 1.3774. So it's about 50 pips, 49. So if I manage to get out using 18 pip stop, but you get out at 49. So whatever you have profited down here, even you don't move the stop for the second entry, let's say the second entry you have not gotten out yet, then the profit will be good enough to kind of protect the entire trade itself. So that's one of the key strategies that I will employ, because if I get into the trade, if the direction is correct, I'll make sure I will not lose money no matter what. Unless it's a freak accident in the market, so there's a flash crash. Apart from that, it shouldn't be. Okay. Right. I would take on any questions on this if you have. Okay, from Yen, you're asking about my main time frame for analysis. Okay, so from a general market analysis perspective, I will still look at the month and the week on a weekly basis. But day to day, yes, I'll rely a lot on day chart and H4. That will be my main time frame for analysis. That's where I decide the direction of the trade. Then when I go into a lower time frame, which is H1 and below, that's where I look at the from hour to hour, what is the price action like. Any other questions? Feel free. If not, bring out the second example. Let's let this chart run a bit. Give me a second. Okay. So I think in FX, especially for day traders, there's almost trading opportunity on almost on an everyday basis. But of course, it doesn't mean that if you look through all this H4 candles, right? After this move, there's actually 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, about 12 candles. So that's 48 hours of not much of movement, unless you manage to get entries around at the low side. Then there's some meat over here. If not, there's actually 48 hours of the price did not move much. So imagine based on just now the example one, right? I went out, I exited my first position. Second position is still stuck in there, right? Let's say somewhere around here, right? Still stuck in there. If I move the stop, then I'll be stop out. If not, then the wait is actually about 48 hours. But this wait is worthwhile because as the price is going to move to the next level, which is this area, that's where typically I will get into entries. So in the lower time frame, let's give me a second. Let me scroll. Okay. So in the lower time frame, this is typically how I will go for the second so-called second setup. So remember in H4 that it's all stuck in here, right, for 48 hours. Right. So including all these candles. First, if the direction has not changed in terms of the trade direction, then I will have gotten even more entries let's say, based on this price level. Then as the price move up, this is second position, and this is the third. Then not forgetting the previous day there was actually or previous trade, there's still this position that's open. So once I get into all this, then when the price start to go a little bit higher, I get into this position, right? Let's say around 1.363768. Then technically speaking, what I'll do is in order to minimize my risk, I will have moved my stop by then, right? Which is 1.3728. All right, I will have already moved it up. Then as the price start to move up, that's where the exit will start to come in. Right. So similarly, the same concept can be applied in the very last position that I have kind of got in, right? Because price has moved kind of to bounce. If you're worried about the price will retrace, doing some deep retracement. So typically what I will do is I will scale out half of whatever position there is in my third position. Then my stop loss can remain at the low side without worrying about being stopped out. Because what we want from a day trader perspective is if it's a market that's flowing upwards, we would like to catch as much as possible in terms of the wave movement. So that's why the moving of stop in such cases is actually very, very important. Because for day trader, the mindset is actually quite tight in a sense because you are locked in within the 8 to 10 hours of trading time that you put in. If the stop is not being managed well, so imagine this whole movement, the trader probably will get nothing out of it if the management of the stop is not done properly. Right. So from my perspective, when I look at how I trade, I don't really have a very fixed style or or or, or setup or whatnot. It's really looking at what the price is doing, what kind of price level can I get in, what kind of stop loss can I use so that my initial risk is not too big. And as the market proved that I'm correct in terms of my direction, how do I size in into the market and eventually ride that movement? So from a day-to-day perspective, I will usually expect between 60 pips to 100 pips for pound dollar for a normal day. Exceptional day maybe 150 pips, but if not, um, that will be the usual kind of expectation I will set, and I will at least get out of the market for 80 to 90% of my position. I'll just leave the remaining 10%, let it see whether it will run a little bit more. Then from there, I'll build up another position for the third bound if there is. Like in this case, the market was actually very kind. It actually have one, two, three bounds that will give very solid kind of actually 4 bounds, very solid profits. Okay. Okay, so these are the two examples for avoiding the pitfall of moving or stops. Any other questions on this? Okay, do I use any indicators? No, I don't. For me, indicators are really just describing what the price is doing. So because I have 10 over years of experience, uh, I just need to look at the naked chart. I will know what the market is doing. So I don't need any indicators to help me in that sense. And also because the time frame is short, for day trader, so usually we don't use any indicators because it will be a bit slow for most of the indicators that is out in the market. Um, Entry time frame. Okay, okay. I think in terms of entry time frame, it's what's important is when I determine the direction of the trade, I will also determine at the same time what is the stop loss price that I will use. If the stop loss price is kind of being maintained, the rest of the entry price doesn't really matter at what kind of time frame I'm looking at. It's really looking at as long as the price don't go down, let's say it's a long, I'll just slowly build up my position. So the concept is a bit different from the usual. Or yeah, I mean if I compare to 10 years ago, I'll be probably looking for 1,001 reasons why I want to get into the entry. But right now it's really I just see I just see what the market is offering. Then as long as my stop loss, my plan is still there, I'll just continue to pad up my position. Okay. Okay, maybe I answer Dave's question as well. The time frame to determine the trend. I think more important is for day traders is really the direction of the day. So I will use up to H4 to determine the direction of the day. Right. Jimba asking about stop loss ever being hunted. My answer is I don't think so. I have a lot of encounters where the market missed my stop by 0.5 pip or 0.1 pip. It happens a lot of time. So I don't think the market will hunt my stop. And moreover, I'm actually trading for a proprietary firm. So the platform is theirs. If they hunt my stop, then that is their problem. It's not mine. the only problem is I don't get any profits out of it. That's all. Okay. Anna asked about, do I determine my entry based on the next candlestick after long green bullish candlestick? Yes and no. The Okay, if I were to look at the H4 candles, right? Okay, so it depends on the price action itself. So like in this case, what the market did was actually it came from somewhere in early July. It went all the way down to the last 2 weeks of July, right? Then it started to make an up move. So once the market start to consolidate, look at this chart itself. There are actually 3 candles of 4 hours. That's 12 hours. So after 12 hours of consolidation, and the market start to make a move, and if you look into the lower time frame itself, you will be able to see actually the price has shot up a little bit. All right, I think that's where the good entries will happen somewhere around here. So if I were to switch back to H1 again, right, I'll just use this, it would be easier. So this is the H4. If I switch back to this H1, see, this is where the last the 12 hours of candles that happens over here, right? This is the candle that tells us that okay, price might be moving up now, right? So if you wait for the close of this and try to enter somewhere around here, you can as well. But a lot of times I will pen an order slightly below. I'll wait for some retracement, let the price come down and retest, and the retest don't fail, right? It doesn't go all the way down. That's where I will go for the second entry when the price goes back up again. Okay, so this is a very typical simple price action that I'll look at. Okay. Okay, swap interest. Frankly, I don't really calculate that. Uh, Almost no impact to how I trade. So I don't know. I don't have the answer for the swap interest for pound dollar. I mean, not off my head. Okay. Paul is asking what is a good range to put the stop order. Okay, that really has to be dependent on the price action itself and how early are you into the entry. If I'm very early into the entry, if I want to get a good price, I probably will start with a stop loss that is a little bit wider. But once the price candle start to form, let's say in H1, nicely, that's where I'll reconsider a better stop loss price. I mean, not such a wide stop loss price. I'll tighten it up a little bit more. Then I'll continue to build up my position. So that's how I would make use of the stop order. Okay, Mitch asked about limit order and market order. I use it both. Sometimes when the market is moving very fast, you need to be quick. Then I will use market order. When the market is not moving yet, I'm just building up my position. Then typically I will use limit order. Yeah. Um, Maybe just one note, because for market order, especially when the market is volatile, there's always slippage. So imagine I mean, for day trader, we are looking at my target exit will start from 40 pips to 80 pips or even 100 pips for the day. A 1 pip slippage or 2 pips slippage can be very costly. So a lot of times I will just pen, get a few pips better. I mean, if let's say I improve my entry every time by, let's say, 3 to 5 pips. If you look at your statistics in the long run, right, it's actually a very good improvement. Once you're talking about 5 pips, let's say my average exit for every lot that I go in is 50 pips. Then 5 out of 50, that's 10% improvement. That's how I look at my statistics. Okay. Dave also asked whether will I manually close at a loss. Okay, generally speaking, I would not, unless the day I'm not taking straight. Uh, that means I'm not sure where the market is going. Then if I start to fidget, then if I realize that I will close off my trade manually, usually I'll tell myself it's time to stop trading. Yeah, because there are times that I won't be able to determine where the market is going because it is not moving. So for such scenario, right? If I close it off manually, that's actually a telltale sign to tell myself slow down or totally stop. Okay. Any other questions? Any interesting characteristic for any currency pairs? Well, if you talk about range of movement, pound dollar is the has the what do you call that, the most the largest range, yeah, the highest volatility as well. Yeah. Euro dollar and Aussie dollar nowadays has been very, very short. So I've been focusing a lot on pound a lot lately. Yeah, it's quiet at times. Yeah. Correct. So range of movement is important. If the pair don't move, don't trade it. just move on to something else. Yeah, Thomas give a very good reminder. If the market don't move, don't push the trade. Yeah. As long as the market is not moving, don't force the trade. If it only move 5 pips, 10 pips, if you get in, you most likely will be kicked out. Alright. Okay. Right. Okay, moving on. Let's go on to the next. Okay. The next pitfall is really talking about sometimes, especially for day trader, as the price move up, right? Like, so you look at this example. Price previously was resisted around this price level, right? So as the price hit up to this area, if and because this is like, yeah, so if you look at this green candle, once it hit up to this price level, there's another 1 2 3 4 5, let's say up to the red color, there's another 5 4-hour candle. That's 20 hours. So that means coming the next day, you have forgotten what happened yesterday, and you're trying to look at the market. If you look at H4 H1 or even lower time frame, you start to think, maybe it hit the resistance, I'll start to short. I think that's where a lot of day traders will make this kind of mistakes. See, the trend has the at least in this H4 chart, the waves has already been established, right? You keep seeing high, a higher low, a higher high, higher low, higher high. Okay, at the point of time, you probably haven't seen this higher low yet, but you already have a new high. Although there's resistance, it doesn't mean that it will not go up any further. So even you choose, instead of choosing to short, if you are really worried about resistance, then I'll rather the trader choose not to trade. Right? Instead of trying to reverse and you try to short it, then whatever profit you have earned, you probably will give back some. Or if sometimes, especially when a trader is not mentally prepared, right? You probably have earned quite a fair bit in the last 2 trade. In the third trade, you will size it out a little bit bigger than normal. Then if you choose the short direction, then that will be totally a disaster. Right? So that's where this probably happened to me in the past as well. Right? That's why in my notes I have this very clear cut put in as one of my pointers. Right? So after many years, I've learned how to follow what the market is doing instead of what I think the market is going to do. Right? So just follow the market. If the market is telling you I'm going up, then just continue to go up until the market tell you otherwise. Right? Then also from I mean, instead of looking at higher high, higher low, which I realize some trader, especially the beginners, they will get confused with the higher high and higher low stuff. So a simple way to kind of to mark down the higher, so-called the highs and lows. The easy way is after every strong H4 candle, just mark a horizontal line across. Right. So in this case, there will be 3, right? So to me, it's very simple. As long as the price don't go below any of the horizontal lines, then it's still uptrend. Uptrend is still intact. So just keep on look for long trades until otherwise. Right. So this is a very typical mistakes that as day traders will make as well. So if I switch to H1, right. Okay, I purposely picked this example as well because this is where these are one of my actual trade. What I did was I actually put a pending order at the low side. I wait for the price to come down and hit it and it goes up. Then when it goes up to this area, this is where I really size it in, and this is where how I take my profits. Okay. Yeah. So avoiding such pitfall will help a lot in the long run. Um, because if you instead of longing, you go and short, you not only lose some money, you will miss a good opportunity as well. Okay. Oops. Just give me a few seconds. The screen is stuck. Okay, maybe I see whether are there any other questions. Any other questions on this? Anyone? While I wait for my trading view to get loaded back again. No. No questions? Hey. Okay.
By the way, Eric's methods do apply on gold, crude oil, and indexes. Okay? Damn, my methods are
Okay.
quite good, but I don't trade them. I don't need to trade them.
Okay. Not sure whether you guys can hear Thomas. What he's saying is also the way that I trade actually can apply to other instruments as well. So it can apply to gold, it can apply to crypto, it can apply to indexes as well. Except for stock and share. Yeah, stock and share is a different ballgame.
Different animal.
Yeah. See, if the trading is very dependent on price, then like the way I trade is I solely look at price movement. Then that's where these methods and techniques will come in very handy. Okay, let's go on to the third one. I have another 5 minutes. Okay, the third one, pitfalls number 3, consolidation. A lot of traders, especially day traders, they will die, they will fail, they will do all sorts of nonsense during consolidation. Okay. Okay. So I think first and foremost is how do you recognize there's a consolidation coming? Okay, probably immediately you won't know, but if I look at this chart itself, see price has went up and it came back down, right? So remember the last horizontal line, they broke the resistance, went back up, then the price turned around and come back down. Okay, that's where I will pay a little bit of attention. Okay, so when the price comes down, same thing. Once I see a significant candle at the tail, I'll just draw a horizontal line across. I draw first, right? Then as the price move out a little bit, right? So you see this green candle, okay? After the red long red candle, 4 candles later, I'll draw another line across. So as long as the price don't go above it, then it just fluctuates in between, right? Then you know that price is actually consolidating. Yeah, of course, as the market consolidate, I will adjust the horizontal line as well. Like in this case, instead of right at the end, I'll probably move it down a little bit to make it look a little bit more uh, easier to read. Right. So with this, when I dive into H1, right, that's where you realize that this is a trading range. So what can I do in a trading range? Do I totally don't trade? I'm a day trader. If I don't trade, I'll starve to death. Okay. So I will still trade. So seeing the both the two red lines that was drawn on H4, right? So in H1, that's where I'll look for entries. I'll basically long at the bottom and short at the top. But in this case, I didn't short at the top, yeah, because the range is a bit too small. Right, so it's not. I wouldn't choose to short at the top because it in technically it's still an upwards trend. So longing at the bottom probably it will be more helpful because probably in the market there'll still be more buyers than sellers at this point of time. Right. So if you look at the green lines, right, these are all the entries. These are all the possible entries. The blue line is where I will definitely have to get out most of my position. Sometimes I'll stretch it a little bit, push it a little bit more. But after so many years of trading, I realize the difference is not a lot. So in a trading in a consolidation range, what is more important is don't lose money, especially don't lose big. Trade with normal sizes, get in, get out. Right. So that is the basic thing that I'll do for trading range. Okay, coincidentally, this is a live chart. So you could see that actually price broke down last Friday, right? Came down. So right now it's actually trying to move back into the trading range itself. So if the market successfully move back into the range, right? Start to have price action between, let's say, 1.39 to 1.3880, right? If the price candles look healthy, right, then I will probably start to look for a long later tonight. And as the price, if it holds, then I will go for, again, same thing at around this level, 1.3928 to 30 region. I'll get out most of the position. Right. When this is how I will trade pound dollar for today, or even next 2 days. It depends on whether this trading range will hold for how long. Okay. Questions. So correlated pairs, to make decision, I do not look at correlationship. If I want to decide a direction of a certain trade for a certain currency pair, I'll just decide based on what I see on the chart. I don't look at any other information, but I do look at it from time to time just to have an overall sensing. But it does not affect how I decide on my trade plan. Okay, does that answer your question? That's from Yen. Okay, view on gold now. Okay, let's see. Gold. Ayo. Okay. Uh, gold suddenly dropped a big bunch last week. Yeah. So, but to decide on long or short, I think the most headache thing is where are you going to plan your stop loss?
Are you trading? Are you scalping for $2? Can. Okay, this morning you scalp already, okay?
Okay.
Now you will come.
For directional trade, such price pattern is definitely not advisable. If you are scalping, if you look into the 5 minutes, 15 minutes, there's probably going to be some opportunities. Yeah.
The first breakup bar, the consolidation collapse, the third bar which should enter already. Anyway, gone already.
Yeah. I think the opportunity is kind of gone for gold. So
Mind carefully. Go for day trading is out. Scalping maybe. Swing intra-week, intra-month, yeah. Provided you can tahan.
okay, you guys hear that?
Not for day, very hard to get. The price movement not there. Oh.
Yeah, that's why from day trading perspective, for today I would definitely not look at gold. But if you want to scout, there's opportunities in there. For longer trend, okay, that one is another different ballgame as well. So the planning will be different as well. Yeah.
Scalping bar a lot of money. That bar alone is worth a lot.
This is 30 points.
30 points. If I dare, I'll just out of 30 points, we capture 15 points now. Very happy. 10 points happy.
Yeah. Too bad. Such M15 candle doesn't come all the time. Yeah.
You know my style. You see market trade market. If really happen in front of me, why not? But if not happen in front of me, I don't bother.
Okay. That's my view on gold. So no day trading for gold for today, at least. Okay. If not, I'll hand this over.
Wait. Do the approach work well on shares?
Where?
No.
Oh, sorry. There's another question. Okay. Okay. Does my approach work well on shares? My answer to this is no. It does not, because shares price movement is not as big. Especially if we are talking about trading Singapore shares, I don't see any way I can apply to day trading.
Singapore shares don't work. Arnold, you're talking about US shares, too volatile.
Okay, Thomas is saying if you are trading US shares,
Too volatile.
it is too volatile.
Singapore shares.
Singapore shares is no movement. So okay, I'm only familiar with Singapore shares. US shares, I think it's too volatile. Yeah, according to Thomas, it's too volatile.
Hey, hello, $15 move in one candle. I mean, your style is more technocrat style, technical trend. What we call trade consistency, not abnormal market movements.
Okay.
So forex, because forex don't have gapping actions. Don't have gapping actions. Shares got.
Yep. Yeah, the one of the main difference between FX and shares is shares there's a lot of gaps, but for FX you don't see it unless it's a weekend. So it only happens on Monday morning. Okay.
Any more questions? Anybody?
Any more questions?
Now we take a 5-minute break. 5-minute break. Then next we will ask Dr. Fu to come in.
Okay. So we'll take a 5 minutes break. Then Dr. Fu will come in the next 5 minutes. Okay. All right. So we're back at 3 o'clock.
Yeah. Stay. Oh, you stay until the end. We have a what we call panel discussion with 3 hours.
Okay. If you can try to stay to the end of the 3 sessions, we'll have a panel discussion. So we'll be with the 3 of us. All right. Thank you.
All right. Dr. Fu, can you hear me?
Yeah, I can hear you. Yes.
It's all yours. Anna, do me a favor. Can you post the link to nightlife market sessions to the attendees for this group? Okay. I got people asking me to have an open house session again, so I coming ask them come in. Dr. Fu, is all yours. Okay. You got 45, 50 minutes, no problem. Even you want, I can give you more time also. Okay. Thanks, Anna.
Okay. Good afternoon, everyone. Dr. Fu speaking. Just to ensure that we are on the same wavelength, the scope of what I'm going to talk for the next 30 to 45 minutes is really on technical analysis, as what Thomas has asked me to do. So I'm not sure how many of you actually know about technical analysis. If you have not taken any program or course on technical analysis, it'll be good if you can attend any course on technical analysis, because when it comes to trading, there are basically three areas in trading. What I call the fundamental, two, technical analysis, and three, behavior analysis. Okay. So today I'm not going to talk about fundamentals. Due to the time constraint, I'll be focusing more on the technical analysis. So for some of you who have been trading for a while, I'm not sure how you approach market selection. So if you have been trading for a while, you know that the first consideration of trading is always you got to select the market, right? So if you select a wrong market, then obviously, number one, you might not able to trade. Number two, you might enter the trade, but then the market is quite difficult to trade, and as a result, you suffer losses. So I'm going to share with you what I normally select the market, because I trade in many markets. So selection of markets to me is one of the most important steps. By the way, I just want to make a very important distinction. There is no right or wrong way to trade. Okay, so always remember, the method you trade or the strategy you trade really depends on, number one, your personality. So what sort of personality you are? Some people by definition are very extrovert, some are introvert, some very easy to absorb new information, some are more mechanical, some are not mechanical. Uh, so everyone is different, okay? So I would suggest that you really have to determine, your personality, and your personality really dictates the way that you trade the market. And talking about personality, I do conduct as a service to all traders. Once a year, I do a personality test. In other words, you come in, you spend about 3 to 4 hours, you take the test, and after the test, I will analyze what sort of personality you are. Now, this test is very objective. Let me be very clear. This test is validated by John Hopkins University Psychology. So they are proven. Of course, it's not 100%, but the test you take will indicate what sort of personality you are, and then you can craft your trading strategy according to your personality. And research has been proven that people who trade based on their personality based on their fear, based on a psychology profile, they make better trader. Okay, so anyway, sorry to digress the main point. So the first thing you need to do is select the markets. Okay, and I'm going to show you 3 markets, right? And then you tell me which markets will you select to trade. Okay. Okay, so this is the first markets I show here. Okay, for some of you, they like to trade these markets. Okay, so basically, you notice that the market actually breaks here, then come the consolidation and breakout. Okay, so that will be the first market, right? So you indicate to yourself whether you like to trade market 1. Okay, the next market is this market. Okay, right. So I will indicate that this is market 2. Okay, by the way, by looking at this market, you know that this is a trending market. Okay, so this is a uptrending market. Okay, so for some of you, they like to trade market 2, right? So end of the day, you tell me whether you like to trade market 2. And the third markets I'm going to show is this market. Okay, right. So that will be market 3. So market 3 is slightly different from market 2 in the sense that there is a downtrend, okay, followed by an uptrend, and currently the market is here, right? Okay, so you indicate to me whether you like to trade market 3. Okay, so today purpose, I'm going to explain about the 3 markets. Okay, let's look at market 1. For some reason, this is a good market to trade. For some people, this might be an easy market to trade. Why? Because there are certain important market structure here. Okay, so if you look at this market, right? Okay, so basically you'll notice that over here, the market is in a very tight range. Okay, it's only here that the market breaks down, and then over here the market form another congestion, test the low of the channel before it breaks up, right? So obviously, these markets will not be very suitable for trend traders. So you're a trend trader, then probably this will not be an ideal market for you to trade. Okay, this will be an ideal market for people who want to trade what I call market action. So if you are a trader who likes market action, then probably this will be an ideal market to trade. Why market action? Because market action follows certain trading rules. Okay, let me just take 5 minutes to explain what is market action. So market action actually is based on a very famous trader called Wyckoff. So Wyckoff is a very famous trader who actually developed the market action trading. So market action trading basically means this. Normally the market will go through what I call accumulation. Then you got a breakout. And after a breakout, you got what I call a distribution. And then after this distribution, there will be a breakdown. Okay. And then the market action repeats again. So as you can see, this market actually follow what we call the market action or Wyckoff. See, there's a breakdown here. Okay, so that will be the distribution over here. You got the accumulation and then the breakout. Okay, right. So the good thing about market action is if you trade this market, there are certain rules that you can follow based on Wyckoff. And the rules is fairly simple, right? Okay. So you'll be trading when there's a breakout over here and over here, right? Okay. You can still trade when the market is in congestion. Okay, you can still trade. So obviously, when you trade the congestion, you are trading with what we call the flat market strategy. In other words, your strategy will not be trend. Okay, and obviously you need to trade with a different time frame, right, to take advantage of the price action. Now the other important thing about the market action is there are certain market structure over here that normally the market will behave. Okay, as you can see, that will be your upper, what we call the market structure high that the market will go, and this will be the market structure low that the market. So you know that the market will be trading within the market structure high and the market structure low. Okay, so the good thing about trading this market is there are certain market structure that the market will give you that advantage. So you trade according to what the market structure is telling you. Trade according to the rules of the market action as defined by Wyckoff. In other words, after congestion, there will be a breakdown or a breakup. Okay, right. So that will be the first market and the way you trade this market. Okay, let me briefly go to market number 2. So this is a fairly simple uptrend market. Okay, so you know that this will be market structure low, and this will be a market structure high. Okay, so the market actually moved from the low. Okay, and right now it has just broken the market structure high. Okay, so that would definitely be a trend trading strategy. So this market will be very suitable for people who like to trade a trend. And who are the major trend traders? They're basically swing traders. So swing traders will like to trade this type of market, right? So another very important thing, they are retracement, okay now. So the market don't move a straight line, the market move up, retrace, move up, retrace, move up. So as a trend trader, you just have to catch when the trend is up, okay? And you don't trade the counter trend. So these are counter trend, these are counter trend, these are counter trend, these are counter trend. Okay, so right now, when the market breaks up, it will form another major trend, okay? So there will be, I would say, majority of traders who like to trade this type of market. Why? Because it is a what we call a trend markets. So you indicate at the end of the day, which market do you think will be more suitable for you? If you have not taken the personality test, then indicate to yourself which market you prefer to trade, and more importantly is why you prefer to trade this market, because it is very important to understand why you have selected this market to trade. Is it because you are more familiar to trade, or whether you think that this method suits you, or what? Okay, the third market I'm going to show you is slightly different from 1 and 2. So this market is suitable for many people who likes to trade what I call with momentums, or what we call the market swings, the peaks and the valleys, right? So you can see here the market actually came down, okay, tested the low here before it rebounds, okay, and the market breaks out here before it went up, okay, and then the market actually retraced down, okay. So for the uptrend to continue, it must break this level, okay, which it did, right? Okay, so the market breaks here, so that will be a good trend trading, followed by a retracement. Okay, right now the market is here, right? Okay, so for people who like to trade the momentums, for people who like to trade the swings up and down, for people who like to trade what I call the peaks and the valleys, that market tree will be a very suitable market for you to trade. Why? Because the market actually move up and down, right? And as you can see, the congestion is very, very easy to identify, because the congestion is very, very short, okay, and the period is very, very short, and the congestion is, it's not very wide, okay, right? And at some point you find that the market really move in a very strong trend, okay. So that's are the three markets that I show, right? Because of the time constraint, I can only show you three, but of course every markets are different. So in summary, when you start looking at the markets, please identify the market that you think is more suitable for you to trade, okay. So the mistake which most people make is they just jump into the market and trade without understanding whether this market is suitable for them to trade, and why are they trading this market. Okay, that's the first step that you need to consider. Okay, the second step you need to consider, which I think is very important, you got to select the time frame you want to trade, okay. So after you identify the markets that you are going to trade, then the next step is you got to consider the appropriate time frame that you're going to trade. And selecting a time frame to me is a very important decision, because if you select a wrong time frame, right, then couple of things that happen. One is the time frame might not be suitable for your personality or your psychology, right? So in other words, for some people, they are very fearful to take a trade that has a lot of momentum. Some people prefer to take a trade with a gradual price movement, right? Okay, so time frame, it's very important. Okay, so when it comes to time frame, basically I recommend there are three time frame you need to consider. Okay, one is what I call a trend time frame. Two is what I call a setup time frame. And three is what I call the action time frame. So traders are different. Now, some traders prefer to trade only one time frame. Okay? And for that, they trade a trend time frame. Okay? So if you're a trader who only like to trade the one time frame, then you probably trade the trend time frame. For some traders, they prefer to trade two time frame, the trend and also the setup time frame. And the reason is very obvious. Okay, the trend will give you the broad domain direction of the market. The setup is a time frame they are trading. It's the standard time frame they are trading. Okay, for example, trend, they like to look at the daily trend. Okay, and then when it comes to the setup, they prefer to look at the 60-minute. That's one example. Another example would be some trader might want to look at the trend on the weekly, right? Then on the setup, okay, they look at the 240. Okay, so these are suitable time frame for people who trade the weekly and the setup. Weekly for trend, 240 for setup. Okay, but they are very experienced traders who go beyond the two time frame. They like to trade the multiple time frame, and for that, they trade they look at the trend, they look at the setup, they look at the action. Okay, now the action is very important because the action is where they put in the trades. Okay, now so it's a trade order. Okay, let me give you an example. Okay, now let's say they trade the trend is daily, the setup is 60-minute. Okay, and then when they look at the setup, you say, okay, that's the right setup, and they want to put the trade. So they go to a 15-minute. So they go to a 15-minute time frame and put in the trade, and that 15 time frame is your action time frame. Okay, and why they put the trade on the 15-minute? Because the 15-minute will give them a better entry, because number one, the time frame is shorter. Okay, instead of waiting for 60 minutes, they wait for 15 minutes to put in the trade. Okay, of course, there are certain rules that you need to follow when you trade the three trends. You need to trade the three time frame, and the rules is fairly simple. Okay, this is the rules that you need to follow if you are trading on multiple time frame. Let's say your trend is an uptrend. Okay, your setup. Normally, when you look at the setup, when the trend is up, normally your setup notice that the trend is down. Okay, which means to say that you are not in a line with the trend. So you wait for the setup time frame 60 minutes to reverse. Okay, that will be an uptrend followed by uptrend. So Therefore, the setup time frame is in line with the higher time frame, the trend. And when that happens, they go to the 15-minute, the action. And what happened? They find that the 15-minute time frame is still a downtrend. So what they do, they wait, okay, for the 15 minutes to show an uptrend, then they put in the trade, okay. So that is normally what happened, okay. Uh, okay. So obviously different markets shows different time frame, okay. As you can see when you look at this market, okay, so you can see that this is the uptrend. And then when you move to a daily 60-minute chart, okay, you notice that previously it was a downtrend, so now the market is moving an uptrend. Okay, so it's in line with the daily chart. Then when we look at the action time frame, okay, the action time frame, so there's a breakup. Okay, so it's in line. Okay, let me move on to the third step that you need to consider. Right, the third step is of course very important. Step number 3, which I call select your strategy. So there are many strategies that you can consider to trade the markets, right? Now obviously there's no one strategy that is best. Whatever strategy that you select must be based on the market structure. Okay, in other words, what the market is telling you based on the time frame that you are trading. So the strategy you select must be based on step number 1 and step number 2 that you have identified. Okay, so broadly I would say strategy can be divided into a few types. Okay, the first type, of course, I call it the TTT, trade the trend, trade the breakout, trade the top and bottom, trade the cluster, right? Okay, and obviously trade the counter trend. So as you can see, there are many strategies, but these are the main ones. So which strategy you select is really your choice, I would say. But your choice really determine on, as I said, the market you select, the time frame. So the most important is although you select one of these strategy, you've got to define your trading rules. For example, many people like to trade a trend, but trading a trend means you've got to define how you want to trade the trend, because definition of a trend from one person to the other is different. Okay, you need to explain in your trading rules what is the validation of a trend. In other words, how do you determine whether this trend is valid before you consider putting in the trade? And I always emphasize you need to plan your trade. And you're planning your trade basically means you follow your trading rules. Step number 4, of course, right? You got to test your strategy. In other words, although I like to trade the trend, for example, I need to test my trend strategy in the market I select. Okay. Number 5, which is very important. Okay. You got to, as I said, you got to plan your trade. For example, if I want to trade a trend, I will probably be trading what I call the pullback. Okay, now. Okay, so the pullback can come in different forms. Some pullback are easy to identify. Some pullback are difficult to identify. So you need to write down in your plan the trade what is the pullback that is suitable for you to take. Okay. I will not go into a detail of pullback because I really spend a lot of time writing an ebook on pullback. So that ebook really explains the different ways that pullback trade can be taken. Then obviously after you put in a trade, the most important step is your trade management. Now before you actually put in the trade, you need to do a couple of very important things. Number 1, you must know, okay, your entry level, of course. You must know your stop. You must know what I call your RR, okay, your risk reward, okay, which define your target profits, okay. So your trade management basically means that you have defined all that, you put in a trade, you make sure that you have your stop protection, and you know when to get out. So basically that's what trade management is all about. Okay, for example, I will show you, okay, what would be a typical trade management. Okay, that would be a typical trade management. Okay. Because I normally trade on the 5 minutes. So right. Okay. So I'll show you, okay. So as you can see that this is what I call a pre-market, right? By the way, I show you this, right? Not because I want you to follow, but I show you this because it is a typical trade management that one need to define before you take a trade. Okay. So that would be a typical pre-market. And most pre-markets actually looks like this. Huh? You notice that the market is very, very flat. Huh? The price action hardly move. Huh? Okay. And then the other thing you notice, they are small candles. Okay. So that would be the very ideal pre-market conditions. Okay. This is what I call an ideal setup, ideal pre-market condition, because the market was pretty quiet. Okay. So we call it calm before the storm. Huh? Right. So ideal pre-markets. So if I see this sort of setup, I know that this is a very ideal, okay, trade management. Okay. So that will be the time, that will be the time frame I talk about. That will be another time frame I talk about. Okay. Time frame 1, time frame 2. Right. So you notice that in this period, okay, the market is pretty congested, but there is a bit of momentum here, right? Okay, now, which tells me that okay, market's actually waking up, right? Okay, during the pre-market open, okay. So there is a pre-market, this is pre-market open. So once you have this set up, you'll notice that this is a very tradable market, okay. Of course, you got to define the rules how you want to trade, okay. So I'm just showing you, okay, that would be a typical setup. This will be a typical market that I trade, right? Okay. And this is a very suitable market because this is ideal, what I call the BO strategy. Huh? You'll notice that, okay? And obviously, based on Haikaki strategy, okay, candlestick, it confirms that this will be a breakdown, okay? Right. I got no time to explain about Haikaki breakout. Okay, if you are interested, I've written the book. You just read it, okay? So I can see that based on this setup, this strategy, you know that this was a fantastic breakdown, okay? And the moment the candlestick reverse, I'm out of the trade, okay? I'm just explaining to you, okay, what I mean by you got to have a strategy, you got to have your setup, okay, your trade management in place. So that in essence summarize, okay, what I normally trade the pre-market, okay, and the market open. This is Nasdaq, okay, right? I'll show you S&P 500. Okay. So as I said just now, every market is different. Okay, every time frame shows different market topology or market different structure. So for S&P 500, it is different from Nasdaq. Okay, right. So that is a pre-market for S&P 500. Okay, so market form a V shape. Okay, right, in a pre-market. When it comes to market open, okay, the opposite behavior took place. Market was pretty congested, right? Okay, over here. So what does that tells me? Okay, pre-market was pretty volatile. Okay, lots of price action. Okay, lots of volatility. Momentum is very strong. But when it comes to market open, it's very quiet, which means to say that this market, right, because it's open, is quiet, then eventually it will be also quiet. Okay, now, and that was it was quieted for quite I guess 1 or 2 hours before the market breaks up and then it breaks down. So that will not be in my strategy an ideal market to trade because the market is pretty quiet. Okay, when market open as compared to pre-market. So let me summarize the major steps. Right, what I've been talking for the last 40 minutes. One, selecting a market is very important. I've showed 3 markets. Okay, time frame, your strategy, your trade management. This is your what we call the planning. Okay, I call it plan your trade, trade your plan. 5, post trade. In other words, after the trade has been done, okay, you need to document your trade. You need to journalize your trade. You need to analyze your trade. Okay, what happened to the trade? Whether is it losing? Why is it losing? Right? Why is it successful and things like that? Okay. So if you're selecting market one, you'll notice that market one, as I explained just now, follow Wyckoff trading rules. Okay, okay, which means to say that okay, so this is a very important zone that you need to consider. Okay, now. Okay, so which means to say that if this Bitcoin from the current level drop to 40,000 level, then that would be a good entry level to consider. Okay, right? So that's the reason why traders is looking at this level to either buy or sell. Okay, now. And this is because of the fact that this is a very strong, okay, demand zone. Okay, so Bitcoin will find support around this level. Okay, and this is actually based on uh, the price action rather than making a wild guess of what would be the ideal markets to trade. Okay. So as usual, if you follow the price action, then obviously you got two zones. I call it the supply zones and the demand zones. And the trading rule is, of course, when a price hits the demand zone, there'll be a high probability it will rebound. Okay, when the price breaks below the demand zone, then the price will move on to the next support zone or demand zone. Okay, so these are what we call fundamental trading rules that you follow if you trade the market action structure. So if you trade based on market number one, that would be ideal. Okay, trading rules, trading strategy that you need to formulate. Okay, I think I will stop here. And then take any question that you have. Okay.
First.
Yeah, Thomas.
Okay. Yeah, here Dr. Fu.
I can't see the question, so
Okay,
you got
fine,
to
no
read it out to
problem.
me, because
Mitch, there's a thing, Mrs. or Mrs. Low. How do you see the trend, week trend for Nasdaq 100 this week trend? So what you're asking, what is your assessment for the trend for Nasdaq 100 for this week?
can I understand the question? The question is what is a trend, or how do I quantify the trend? Which is which?
No. How do you see this week trend for Nasdaq 100? Your technical analysis for this week Nasdaq 100 performance.
You mean you're asking me to forecast, is it?
No,
Or what?
you're asking your opinion. How you see, not forecast. If we don't entertain forecast questions. What is the price going to be this Friday afternoon, 12:01 a.m. Singapore time?
What is the difference? You're asking my opinion, or you're asking
Yeah,
me to
asking
forecast?
for
Which
your
is which?
opinion. What's the trend? What is the market outlook based on what you see your chart patterns?
Okay, let me try to answer the question this way. Okay, now. Now, the way I analyze the markets is always based on 3 time frame, which I explained just now. Okay. The first time frame is what I call a trend time frame. And for me, a trend time frame is always based on D1. Okay. Okay, that's a look back of D1. A look back must be 12 months. Okay. I normally use what I call a wave structure. Okay. Now. So anyway, the way I analyze a trend, I'm using a wave structure. So unless you're familiar with wave, just bear with me, okay? Now. So in other words, if this is wave 1, okay, right, then this is wave 2, then the third wave will be the longest wave, okay lah. Okay, so that will be wave 3, 4, so right now we are here, right? Okay, right. So potentially we have what I call an extended wave. In other words, the market actually breaks the 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 highest high here. Okay, right.
Yeah.
So that's how I know that this is a very strong uptrend, a bullish market. So when it comes to trading, of course, you've got to select the time frame that you want to trade. Okay. And I always trade on a setup based on 1 hour. So that's a 1 hour setup. Okay. So two things that tells me that this is an uptrend. Look at this pivot low and this pivot low here. Okay. Now, this pivot low is higher than this. So therefore, it confirms that it is a channel, up channel. Okay. Right. So you got to trade within the channel. So right now, as you can see, the market is trying to test the upper channel. Okay. And once it fills the upper channel, most likely it will do a counter trend. Okay. So if you are trading on the TTT strategy, trade the trend, then you got to trade the counter trend. Okay now. Which is trade the counter trend. So you cannot trade the TTT, you got to trade the counter trend. Right. So what's my view? My view is the market will test. Okay. The market will test this level and do a counter trend. Okay now. And there will be a zone here. Okay. Right. The market goes up. So there are two ways the market can move. One is it tests the upper channel, okay, at this level, okay, and it breaks all the way to test this level, okay, right? So that will be my response to what I think the market will be doing for the next couple of days, right? Okay.
Mm. Mm. Okay. Anna asked this question, your trainer student. Is your setup still ideal if pre-market and market open is volatile? Dr. Fu?
Can you repeat the question again?
The Anna, your trainer student, is asking, is a trade setup still ideal? What you showed just now, if the pre-market and market open is volatile.
Okay.
Okay.
So is this a? I don't really understand the question. Okay. Okay. Now, if he is trading the way I want to trade, you got what we call the pre-market. Okay. Market open. Third action. Okay. Now. I explained the pre-markets. I explained the market open, but I've not explained the action. Okay. Now. So the action really depends on how you want to trade the pre-market and the market open. Does that answer the question that Anna is looking at, or what?
Okay, Anna, make it simple lah. Dr. Fu will try to explain to you what I will tell you one sentence lah. Ski market, trade market. The trade setup is valid provided the pre-market, your initial assessment is still valid. If the market suddenly go up, abnormal changes to the market, then the setup is not valid. Okay? Anna, you understand what I'm saying? You understand what Dr. Fu saying?
I think he's asking me to define precisely how I trade, right?
No lah, Dr. Fu. That one that we have been doing during one of your live market session with your students.
No. Thomas. I can answer him now. I don't have a preset rules, okay, on item number 3, the action. Because
Yeah.
I'm a discretionary trader, don't forget. I'm not a mechanical trader. Okay? So he
Okay.
has to understand that I can do the setup on pre-market, market open. But when it comes to action, I'm a discretionary trader. I might not want to take the trade, although it is within the pre-market and the markets in my trading rules. Okay? Because I'm a discretionary trader. But if you're a mechanical trader, then obviously you have to follow the rules set up in pre-market and market open. Okay? Now?
Okay. I think you understand already, Anna.
Because I'm not a mechanical trader, Thomas.
I
Sometimes
know.
I
He
don't take the trade.
understand, and he
I
understand
don't take
already.
the trade. Right. I only take the trade when I understand that it's perfectly profitable. Maybe probability of about 90%. Okay. Now?
Okay. Any more questions for Dr. Fu?
By
Any
the
more
by the
questions for
way,
Dr. Fu?
by the way, just to let Anna knows, I did the I think a couple of days back, right, in the Trading Naked webinar, right? I
Yeah.
explained my strategy. In the Trading Naked webinar, I explained 2 strategy. Pre-market open, this is a strategy, and the other strategy is a pivot. So all you need to do is just master these 2 strategy. For the Trading Naked graduates, I don't know whether they they really understand what I'm talking about in the Trading Naked graduate webinar or not. These are and in the webinar and in the Trading Naked graduate webinar, I explain in much more details, Thomas. Right?
Of course. Okay. Anyway, if there is no other question for Dr. Fu, Let's take a 5 minutes break. Then then I will do a half an hour, 40-minute session. Afterwards, then we will have a three panel discussion. Three of us, Eric, me, and Dr. Fu. Would that be good, ladies and gentlemen?
Hey, Thomas, is there are only two questions. I'm very surprised because I thought there could be more, right? There are
I
30
don't know.
people.
The Mitch one, the Nasdaq 100 trend, and one Anna. Any more question? Vincent is here. Okay, ladies and gentlemen, if not, let's take a 5 minutes. Let's take a 5 minutes break. Come back. Go to whatever coffee. Take a break. Whatever. We'll come back in 5 minutes time. Then from there we will follow up by a live US market session. I will do about half an hour, 40 minutes. After which then we will do a panel Q&A. Okay? Hmm. Something is not right. Why so slow now? Okay, here is good. Okay, fast audio visual check. Can you hear my voice and see my screen? Okay, let's do a fast one. Ladies and gentlemen, this one is a short and is a short instant version of how do I use shares or options to trade. Okay, as a trader, we are objective wait, give me a minute on the screen. Yeah. Yeah. Can you hear my voice, gentlemen, ladies? Any companies you want me to look at first? Any companies you want me to look at? Okay, let me run through a few examples now. I have okay. Let me see first. Now, let me show you. Let's do a continuation trade trading. XFX. No, that one is not going us apart. XFX is a financial ETF. Okay, financial ETF, not structured trade. You can buy the shares for $37, which is very cheap. $37 very cheap. But currently now, if I were you to trade, I will not trade it because why? Because yes, it break out from the channel, the so-called the immediate channel. But bad news, okay, the bottom channel, but bad news. The entry price now is $37, 37.86. The all-time high is $38.60. The 1 year high is 38.60. So, Vincent, not much profitability. If you want to do this trade, buy shares. At least with shares, you can make about 80 cents. Options much harder. Okay? Let me show you an example. Waste time. Because tonight, ask question now. This is German. Now, this is a nice company. Have a good earnings report. Have now today have break a 52-week high of yesterday night. So now, ladies and gentlemen, in the world of trading, I think it's a nice big move. Company got good reports. Okay, good reports. And now the dividend come out, they come out special dividend 20 no, come out normal dividend. After dividend shoot up to now is for the yesterday high is $48.99. Okay, break the immediate high level, 1 year high. So now as a trader, can trade? Yes, you can. How many ways you trade? You can buy the shares, ladies and gentlemen. Buy a shares is how much cost you how much? 100 shares will cost you $4,877 now, based on the latest market price. But we are traders. I don't see any reason to spend $4,877 when you can do a 62-day trade with a straight call. I don't read that. Do a 39-day trade with a price of $1.37. So you can buy one options. That costs you how much? That costs you $138, $136. Or you can buy 100 shares. So the objective of this seminar now, of this session now, is to show you the different ways you can trade. One, buy shares, 100 shares. Cost you how much? $4,877. Buy one swing trade for 38, 39 days. Cost you $136. Okay, so in the world of trading, which one better? Depends on you. If you are a seasoned veteran trader, Thomas, I buy 100. I trade in 100,000 lot size, 100,000 share, $100,000 worth of share value size. Then go and buy the shares. But if you as a starter trader who are midst of starting to learning how to trade, please use options. Ladies and gentlemen, Thomas, I buy the share only, I can afford it, $4,877. Yes, I agree. But you as a person starting up or struggling, or you are stage of learning, starting to learn, it's better to use cheaper trades. Why should you do a trade for $4,877 when you can do what you call a learning trade for $136? I tell you upfront, your $136 $536 is cheaper than your stop loss price. If you go and do the buy 100 shares of Wells Fargo because you feel that Wells Fargo will make a new high, which good chance. Your first thing first, your stop loss for this trade based on 1 month low is actually at $42 level. $42 minus current price of 48.77. Your cut loss value is $6.77. Okay, so your cut loss, you buy 100 shares at $4,077. You prepare to cut loss at 42. That means you prepare to $6.77. You might as well take the $6.77 go and buy 4 contracts of these. Buy 4 contracts of these. Sorry, 5 contracts too much. No, 5, 6, 7. 4 contracts of these will cost you how much? The 4 contracts will cost you $544, which is way below your cut loss at 6, which is below cut loss with below your $6 cut loss capital margin. Okay, so this is why I'm thinking what I call efficiency trader. Risk must risk less. When I say risk, I'm not talking about cut loss. In my world of trading, I don't do cut loss. Why? Because cut loss is not a good. It's only for people who trade $10,000, $50,000 account size. No, $50,000 per trade, then you put a cut loss. I understand. You put it $10,000, I understand. But if you go and do a trade for $136 for 40 days, I don't think that's 100% don't need because using stop loss money. Thomas, your 39 days is too short. Fine. How about you go and do a 3-month trade? Let's go and do a 3-month trade for November. 101 or 3.5 months straight away. Okay, for your $600 stop loss, cut loss money, you can buy 2 contracts of these. How many days? 3 months, 3.5 months. You can buy 3 contracts. You can buy 2 contracts of these for $526. This is why I thought trading with your stop loss or cut loss capital. Anybody got any questions? Please type out. So I see no reason, ladies and gentlemen, in the world of market trading, no reason to spend $4,877 cash to buy 100 shares where you can use your $6 cut loss money and go and buy corresponding options. Ladies and gentlemen, Thomas, I got stop loss, I safe. Excuse me, you never see shares drop $10, $15 before. I don't care how good your stop loss is, ladies and gentlemen. Your capital exposure is $4,877. I don't care what you do, but your capital exposure, you buy 100 shares is $4,877. Cannot escape. Okay? If you are worst case, if you want a very worst extreme case, Thomas, you might as well go buy Amazon. Amazon, I got people, Thomas, I buy Amazon shares. The broker give me 10 times leverage CFDs. Excuse me. If you go and buy, ladies and gentlemen, if you go and buy 100 shares of Microsoft, Amazon, will cost you how much? Will cost you your cost of trade is how much? $335,999. Commission is free. Buy power effect means a margin deposit is $100,800. If you can afford to do this type of thing, you might as well go. If you can afford, you can afford $300,000. You might as well go and buy one option better. The option will cost you how much? The option only cost you very cheap. Compared to mother shares, this option will cost you how much? The option will cost you $186 or $18,610. Thomas, yeah. When you buy options at $18,610. Worst case, you are wrong. You need to lose $18,000. If you go and put in $335,600, you are exposed. Your risk is based on $335,600. Okay. Now, okay, we can discuss. Okay, any questions? Thomas, I very poor. I cannot afford $18,000. Fine. Then why don't you do a bullish directional trade? You still bullish Amazon right now? Problem. We can do a trade. Okay. Ladies and gentlemen, objective of options is powerful. Let you risk less capital, lose less capital exposure, less risk, make more percentage, make more returns in terms of percentage. This trade will net you 100% return. If you are right, net 100% return. Worst case, how much you lose? This is a trade. This is a real trade. Okay, tonight we look at it. See now, what's the maximum loss? Maximum total loss is $4,988. Maximum profit is $502. Return over risk 100%. Means that your return over your capital risk maximum loss is 1%. Thomas, I buy the shares. Excuse me, ladies and gentlemen. Okay, mention to you. Let's say buy straight call. Maximum loss is $18,600. Okay, Thomas, are you stop loss? Fine. Thomas, I trade Amazon with $5 stop loss. Do not tell me about bullshit. As you can see from here, the last earnings, the last biggest move we have, Amazon dropped from $3,592 level, dropped down to how much? Dropped down to 3,350. Dropped by how much? Dropped by how much? Dropped by $200 over dollars. In one day can drop over by $200 over dollars. $200 is how much? Is $20,000. You might as well take the $20,000, go and buy a 3 months, go and buy November 19 100 days options for $186, which is smaller than your stop loss value. And if you, Thomas, my account size needs $5,000, $10,000, I cannot buy, then fine. Then go and do a bull call spread. $500 only. Okay, anybody got any questions? Okay, now let's go and find a retracement trade. So now this one, because options are, ladies and gentlemen, I see unless you are substantial accredited investor trader level, I see no reason anybody should buy expensive shares to trade. Yeah, of course, if you buy for your grandchildren investment fund, for your grandchildren education funds, I said yes. Anybody got any questions? Here is a retracement trade. This company 5 days ago have earnings announcement from $150, dropped down in 2 days, dropped down to $126, $150, dropped to $160, dropped $24 in 2 days. Your stop loss will not save you. Okay? Remember, your stop loss will trigger the drop will trigger a price. But your orders, as a stop loss order, you will send over, your trade will be sent over to fill close at market price. That's why I say, if you are stuck, unless you do for long-term investing, use options. Or unless you use for scalping, intra scalping for 15 minutes straight, then you shares. Okay, now there is a potential trade now of what you call a retracement trade. After dropping hit a low of 4 days ago of 126, now it's going back. Yesterday hit the high of 135 and above, go back to 133. So if by today, next few days, breach the high of 136 or 137, you can do what we call a bullish retracement trade using options, of course. You want to buy mother shares, go ahead, nothing wrong, I'm not stopping you. But I know, ladies and gentlemen, I teach you options, not because I expert options. I do a lot of shares and future trading also. I teaching you options because let people with a 5K, 10K, 20K account size to trade. Okay, next. Let's say I do a 30 days retracement trade. This company, Pfizer, is not a very popular company. So now you want to do a 90 days retracement trade. Okay lah, let's say we do November retracement trade, 110, 3 months, 3.5 months away. Will cost you how much? To buy a trade will cost you, average price now, if the price now is $7.30. Ladies and gentlemen, my student will, if my student will trade, my student will queue at 650. My student should queue around 670 or 670. Yeah, around 670. Yeah, 670. Okay, my student will queue at 670. So you want to do a trade, the retracement trade? Can. The market price now, you go and buy market price now is $7.30. Thomas, why $7? It's very expensive. Why not? Ladies and gentlemen, if you go and do a buy mother share trade now, your stop loss, where is your stop loss, cut loss going to be? Your cut loss should be at 125 level. Okay, 125 level, correct. The low is what? The low is 125.53, correct. So we cut out 125. Market price is 133.80. So your cut loss, you buy at 133.82. Your cut loss is 125. 125 happens to be a 4-day low. So it means that, yeah, you buy the mother shares, you prepare to lose $8, $8.80. Nothing wrong. Ladies and gentlemen, nothing wrong, $8.80. So instead of buying the mother share and put $8.80 stop loss, cut loss trade, you might as well go and take the $8.80 and go and buy one option to replace your share trade, cost you $7.30. The cut loss is $8.80 in the first place. From use your cut loss money, $888.80, and find one options. This trade is valid for 102 days, means about 3 months, almost 3.5 months. It's a retracement trade. Which one better? Buy shares, put stop loss, or you take the take your stop loss, projected stop loss, capital value money, and use a straight call, go and buy a straight call bullish trade. Any question, anybody? Or you all know about options already? Thomas, I don't have the budget. My budget is $250. Fine. If your budget is $250, why don't you do a 39 days trade? Cost you $3, okay? For this $3 retracement trade, you right click here. Thomas, I can't afford it. My budget per trade is only $250. So can't afford to buy a straight call, okay? So you buy a vertical spread. A $5 vertical costs you how much? $1.78. Nothing wrong, $178, which is below your $250 fixed capital trade. What's the profitability? $322. Lose 178. Your return over risk is more than 150% return. Mr. Yang, my advice to you, if you want to know about trading option, I suggest you to sign up for tonight webinar. Tonight I have a live trading session with my students. So I invite you all to join me with me and my fellow traders as we trade the US market. Okay? So why should you risk 100 shares at $13,332 when you can do a trade for below $250, or do a trade for $730, $7.30, which is below your stop loss of $8.80. Okay? This is what we call, ladies and gentlemen, do not be handicapped. I no problem, Thomas. I put CFD law. $13,000. My broker give me $1,400. I can buy 100 shares already. Times 10. Ladies and gentlemen, if the market tank, let's be honest, look at this company. You think it's a good idea to trade with borrow money? This company, okay, let me show you. Where is it? Baba. This company, in 2 days, from $150, dropped to 125. Thomas, very low chance. Excuse me. One time like that enough. Just imagine you go and borrow CFD 10 times. You put in $1,400. You go and borrow 90%. Wow, you owe me money. The end up, the broker will sue you for the rest of money, okay? FIS Visa, just mention this is what I call ongoing market opportunities. This one, I think, is a nice, good retracement trade, provided it breached the 135, 136 tonight or tomorrow night. Definitely got chance of good, what I call retrace back the trap. Ladies and gentlemen, remember, one week ago, the price is 150 leh. Now we enter at 137 or 136 we got potential underlying share movement of 136 to 150 level leh. Okay we're not greedy 137 to go to 14 to go up to 141 level definitely got chance to go back to retrace back to this what we call the immediate channel. Anybody got any questions? Okay, that is a retracement trade. Okay, well, why don't I do a tactical trade now? This is a tactical trade. What's a tactical trade? Means that it's a short-term trade for to capture a movement for a day. Expedia. Expedia is $148, $90 company. Okay? Come out some bad news. The thing collapsed down. We don't care. Okay, now it is so tactical. What is tactical trading? If tonight come out from yesterday operate 2 days ago operate price of 161, 162 level. Yesterday dropped down to last Friday night trading dropped to 145. Now tracing to 145. Now it's reaching to 148, 149 level. So two things will happen tonight. Three things. Tonight, market make new low. If market make new low, ladies and gentlemen, we can continue. We can continue to do a bullish trade. Okay, we can do. If the thing make new low, we can do a bearish trade. Why? Hey, friend, that means what? Follow the trend. Friday night broke a 6-month support level. Correct. And now, if tonight make new low, means what? We call a breakout momentum trade. If tonight or next few days after bulls and bears fight it out, then go back to 152, 153 level. Okay, that means that we are doing what we call a tactical retracement trade to go back to 155 or 160 level. Okay. Anybody any questions? So this is what I call retracement. So this is called C market, trade market. Now it's like that. Thomas, how about pre-market price? Okay, let's see pre-market price. Okay, post-market price is more exact. Pre-market price, okay, this one don't have, okay. Anyway, you can see from here, decision. Okay, now we see how. Tonight, we will see what the market move. Okay, next we will do bottom fishing. Okay, we do Crocs. We know that not Crocs. We do a Crocs. Crocs are nice shoes. Anybody got any questions? Any companies want to take a look? Crocs, nice. Making new high. Last 7 days, last 5 after breaking the immediate high. Last 5 days making bullish trade. Making 5 days of bullish candles. This is what we call a trend continuation trade. Okay? Overall wise, you can see that this company is very company. The last earnings shoot up from 120 to hit 135, 133. The previous earnings from 1 March from $88 shoot up to $90 over dollars, $100 benchmark. So this company is based on the pattern alone. Wow, bullish all the way. Correct. So now, ladies and gentlemen, we want to do what we call a positional intra-year trade or leap trade to ride this bullish trend. Okay. Next, So now, as a trend trader, we're going to do a trade that lasts 1 year. 1 year, 1 year plus minus. Okay, so as a 1 year trade, as a 1 year trader, you must put as they say, buy shares, correct? Whole 1 year, guys, must put a stop loss, correct? For this case, the smallest stop loss you can put in is at one cut loss at 110. Thomas, why 110? Why just put a $5 stop, $1 stop loss? Excuse me. If you hold a trade for 1 year, you must use a stop loss that representative 1 year position. So by right, the smallest stop loss is 110. By right, everything you should. If you do a 1 year trade, your stop loss should be at $85 level based on typical technical analysis support resistance level. Okay, now we go and do a 1 year trade. Buy shares, cut loss at 110 or cut loss at 85. So now we're going to buy options that last 1 year. We want to ride the bullish ramp. Been bullish for so many months already. Check. Okay, bad news. We don't have 1 year exactly, but we got option up to March 2022. Okay, is about 8 months away. Good enough for us. 2 earnings. Instead of buying 100 shares, you can buy 1 options. Okay, ladies and gentlemen, the market price is $140. The 30 day the money low is 110. So your basic, the smallest, most conservative cut loss is at 110. Cost you $30. $30 you instead of go and buy the share at $114,000 and cut loss at 110. Why don't you take the $30 stop loss, the cut loss value, go and buy 1 lead options? This trade is valid how long? This trade is valid for 8 months up to 15 March 2022. Thomas, I would hold longer. Fine. Why don't we do 1 year plus? Next year, up to 20th January 2023. 20 January 2023. How much cost you? It will cost you $33. The $33 is your 1 month stop loss. If you go and base on your 3 months, if you go and base on your 6 months stop loss, 6 months stop loss, the 6 months stop loss is 85. Current market price is 140. Your 6 months stop loss support level is 85. So your stop loss is $55. Your 30-day your 30 days 60-day stop loss is at for $30. Anyway, look at it carefully. We are using stop loss money to trade a trade. So which one better? Spend $14,000 and put $30 over dollars cut loss? Or which one? Any question, anybody? Okay, good. Good questions. I will answer you this question. Thomas, okay, somebody asked me a question regarding what? Regarding how I trade NASDAQ, how NASDAQ 100, something like that. So, oh no, hang again. Okay. Shouldn't be a problem. I got 16 gig. I got 16 gig of memory inside here. Sorry. Okay, let me show to you how do I trade NASDAQ 100. Somebody asked me, Thomas, NASDAQ 100 now is not going anywhere. What should I do? It's still stuck. Okay, technical problem. Review, is it? Sorry, Facebook having problem. I tell you what, to the person asking about NASDAQ 100, my advice to you, go and visit me over. Go and visit one. Recently, I post a trade inside here. How do I trade what we call sideways market? Directionally. This is why I post up live inside the Facebook group. This is a recent trade which I did for Nasdaq 100. This trade is open last week. Tonight, if the market go well, I will definitely do the trade again. This is 2.2 directional trade. Means what? It's a directional trade, but market drop is a bearish directional trade. Market drop make money. Market don't move market. Market do not move a single point, I make money. Market go up by 10, about 25 points, I also make money. That's why they become 2.2 directional trade. So people ask me a question, why is 2.2 directional trade correct? This is the type of trading about. Let's show how powerful option is. Market drop 1 point, 100 points, I make money. Market move or don't move, I make money. Market go up, I make some money. My return is not 47%. I calculate wrongly. My Facebook trader said, Thomas, you are idiot. How can it be 47%? You put in 160, you net profit $240 in open on the 5th, expired on the 6th, market close. The best part is passive. So even the market don't move, I can make money. Market drop, I make money. Of course, if the market shoot up all the way, I lose my 160 lah. And this is why I teach my student. This method cannot do. Thomas, how about day trading? Here, I ask student of mine. He did yesterday on Friday night. Okay, you can see from here, Facebook. Join the TRT Traders Facebook group, please. Yeah, he make how much? She make how much? She make $1.40. How long a trade? Open at 12:40 a.m. The market closed at 4 a.m. in the morning. The trade is 3 hours and 20 minutes. Make 40% return around there. So this is, of course, this is more advanced, but options, let's show you the power. Market don't move, we make money. In fact, the market go up by 25 or 30 points, she make money. Market drop a lot, she make 40%. So this is why I call fixed fee trading. Thomas, what is her stop loss? What is her stop loss? Her stop loss is what? Her stop loss, no stop loss. She using her stop loss capital, $3.60, her stop loss money to buy open the trade. Okay, sorry. This guy is from Thailand. Okay, any questions? Anybody? If there's no questions, we take a break or not? Yeah, fine. 5 more minutes. Okay, now, if there's no questions for me or you want to ask thing about it, tonight you ask me a questions. If not, gentlemen, now is an open panel discussion now. Okay, open panel discussion now. Dr. Fu, Eric, and me. Any question to ask? Okay, somebody send me a WhatsApp. Okay, fair enough. Okay, now ask me which is the best market to trade. Every market is the best market to trade, because if any market you can lose money, anybody can lose money at any market. Therefore, ask yourself, if somebody lose money, the money go to where? Okay, so every method sure make money one, as long you're the winning trader lah. Anybody got any questions for Dr. Fu, me? Eric? Anybody here now? Gig also same problem. Anybody got any questions? Please type out. Thank you very much. Or everybody go home already. Say like that. We still got 30 old people inside leh. Okay, in the world of my trading, Helena, Miss Lee, I use all. I use all. To me, credit or debit, whichever strategy are just tools. Okay? Sometimes I use credit, sometimes I use debit. Okay? Both of them are viable. Now, anyway, which one to use? Which one better is to use? One, my friend. Don't run over place, but okay. Which one to use? Is one like Dr. Fu said what? See the market, trade the market. We are a discretionary trader. If the market says, hey, sell is better, we will sell. If the market says buy is better, less risk, more return, I definitely buy. Less risk, more return, sell, I sell. Okay, understand me now. I do not know what Miss Lee, I don't know where you are. I have a directional class starting soon. I best to join in. Okay. Okay, we'll look at crude oil. Sorry, Helena, I do not teach everything nowadays. I specialization in one-to-one. Okay, if you want interested in the income class, join the income practitioner level class. Income practitioner level class now is 6 months long. Okay, anyway, don't mind. Let's focus subject here now. Let's look at crude oil futures. We look just now we look. Okay, go. Okay, so now what happening now? Go now. Today I have a nice. Okay, sorry. So this is a weekly candles. I need to change to daily candles. Sorry, almost made a boo boo. Okay, you can see from here. Today alone, okay, the price action value moved $87. Yesterday, moved 47. Before that, average price movement for price action value is $90. So you can say the last 2 days is super volatile. And normal, bearish, and normal movement market. Okay, so now in my personal opinion, I would like to do a bullish trade. Okay, depend on what's your objective and your time frame. So you ask me, is it going to make a new low? The answer is no. Why not? Because today the thing drop almost 80. How much? Drop $87 for almost that. Then afterward, from 87 bottom here, from drop to test 77. Now retrace back by 70 over dollars. It 1678, correct? Now is now it retraced back by almost $70. That means what? The bears have failed. The super bear have kena push back all the way, but it's still not bullish yet. Why? It has not retraced to cover back the gap yet. Depends what is your objective. If you tell me in a longer term picture, I tell you not to do. When say longer term, give me a definition of your time frame, please. I'll give you definition of time frame. If you want to do purely this one already, okay, H4, forget it, too late already. The market run away already. Let's look at H1 candles. Look at H1 candles. Okay. If you want to do H1 candle, look at it carefully. I tell you already when it enter already. My ultra traders already enter right over, short over here, take profit over here. Next short over here, take profit over here. In fact, I think they take profit over here. And again, like I said earlier, if you are doing a scalping method, scalper trader, easier to handle. Look carefully, just for fun of learning it. Let me show how extreme volatile market is. The stupid bar alone. That's why I say see market, trade market. You can see the big bar here. Break here, short over here, get out over here. That fast in 15 minutes. So now I don't think you can trade. H4 do not give us clear directionality as per se. Okay lah. If you look at H4 candle, we are now carrying inside candle. Dr. Fu, Eric, what's your comments? Dr. Fu,
It,
can
it
you,
really depends on what sort of trader you are. So I think this is a very fundamental question, which I've discussed just now. What sort of trader you are? Are you a scalper? Are you an intraday? Are you a hit and run trader, or are you a swing trader? So if you are what someone say is an H4 trader, H4 trader by definition is really a swing trader. So you must be prepared to hold, 3 to 5 days. So that being the holding period, okay? As you know, this is a retracement trade. And what is a retracement trade? You must wait for the retrade. You know, if you are bullish, then I don't think you are trading with the trend. You are trading with the counter trend. But you are taking a retracement trade, which means to say you are waiting for 61.8 level or 78.6 level, then you are doing what we call a retracement trade, which means at the end of the day, when the price hits 78.6, 61.8,
where are you?
then you are in a position to short the market.
Eric here. I promote you. Where's Eric? So you can talk directly. Here.
So that's my response to the answer to the question. Sorry.
Okay. By the way, this is your H4 is what we call intra-week swing. Open on Monday, Tuesday, close on Friday night. Next week, continue part 2, part 3, part 4. Okay, we don't do that. Okay. H4 is intra-week swing. Eric, you want to give any input? H4. Not worth it. You can put a stop loss at 180, 1678. Yeah. If you're a scalper, you should use M5 or M15 as the market go volatile. You should enter a trade and get out already by now. Okay, anybody, any more questions beside Berg? Crude oil. Hey, you all please type out a question Okay. Alright, let's look at J chart. Yeah, we call 5-day support Crude oil is testing support now. Testing. Thomas, I go bullish. Sorry, please don't go bullish. It's only when you bounce off the support by X number of dollar valuation, then you enter. Do not use this one. This one not reliable. You must use the latest market data, which happened right here. So now, how do I trade this one? Personally, I will wait. Let's be honest. If of course, if a thing drop below 63, of course then we know what to do Follow the momentum If a thing bounce, definitely we can bounce. If the thing go back to 68, I will definitely have no qualms taking a short term intraday or intra week trades. But okay, don't hawk it. Don't not hawk too much. Okay. Anyway, anybody any questions? How about you, Helena, Miss Lee? Anybody else? Panel discussion. Anything will do. Dr. Fu, correct. We are now. Do we agree on everybody? Dr. Fu, Eric.
Crude oil, is it?
Yeah.
Are you
No.
talking about crude oil?
Yes. You can see the pattern on there.
Okay, if you look at the crude oil, from a technical analysis standpoint, it is going to test what I call a demand zone. Okay, so as a trader, you have to wait for the price to test the demand zone first. Okay, rule number one. Rule number two, when the price action rebounds from the demand zone,
Ask me about copper.
then that will be your trading plan, to put in a trade.
Not in decision. If you break, we enter long short. Okay.
But
Next.
if the price action breaks the demand zone, then you can comfortably say that it's going to test the next level. So the price action is to tell you that okay, the price is bearish already. So what do? You have to go on the short trades.
Common sense. Okay. Thanks, Dr. Fu. Mr. Yang. Yes, it's double bottom. Please don't tell me it's bullish. On the basis of double bottom, triple bottom is bullish. Nah, I tell you, you are English word call you smart Alex trader. I think double bottom market retrace no, don't be like that. If you want to trade double bottom, please make sure it bounce, confirmed by price action value, or confirmed by candlesticks, confirmed by price action, or confirmed by something. You cannot say it hit the bottom, two small bullish candle, I will go long. No, do that. Okay. Now next, somebody
Okay,
asked
Thomas.
for oil.
Thomas.
Yeah.
Thomas.
Yeah.
Thomas.
Yes, Dr. Fu.
Okay, now if this is a double bottom, then what is your trading rules? Your trading rules is to trade when it breaks the neckline, not when the price rebounds. So that is a fundamental technical rules that you need to follow in terms of trading the double bottom price pattern. You trade the neckline breakout, not the rebounds, please.
Okay, that's good. Good. Next request. Somebody asked to look at copper futures. Okay, fine. We have trade copper futures before. But ladies and gentlemen, if you want to trade copper futures, there's no shares as per se to trade copper futures. Copper itself, most of the time we trade to ETF or futures. Okay, just before we go further, no. HG there. Okay, wait a minute. There's a typo error. Okay, couple of things about copper futures now. First thing that before you run all the place, do take note of a few things. This is a futures trade. Okay, the problem with futures trade this one needs $7,300 in margin requirements. Okay, next, $7,300 is not your risk. $7,300 is just a deposit for your risk. Okay, now look at chart. Let's go to HG now. Let's look at the pattern now. HG. Now, as it is now, HG now, technically is all we call by personal point of view. Unless you're doing scalping, this is what I call no head, no tail position now. It's not making you. Even you short this trade, can. But unfortunately, the current price of $44.29, okay, is okay lah. Depend on you lah. Okay. Dr. Fu, your comments. Eric, your comments, please. For these copper futures.
I think this is a very easy market to trade. If you look at the price action, okay, first you consider the market structure. The market structure is telling you it tries to be bullish, but it fails. Okay, that's number one. Number two is wait for the price to penetrate 4.1767 or 4.18 level to consider how to trade the market. Because at 4.18 level, it gives you a better insight of what's the price action going forward. But the market is telling you two things. As I said, one is the second market high fails to break the market structure high. So that's telling you the bears are stronger than the bulls. But you got to wait. You got to wait for 4.18 level to see how the bulls and the bears competes with each other. Then you consider how to plan your trade and trade the plan. So patience is very important in this trade. Huh?
Mr. Young. Sorry. Mr. Young, what is your time frame for trading? Wait, when you say weeklies, you're using weekly candles, or are you using weekly cycle? What is the time frame for candlesticks?
He's using weekly, Thomas.
Okay.
He's using a weekly chart because he's telling you it's a weekly candle.
Ooh. Wow. How long are you gonna hold a trade?
My analysis based on daily chart is the same as weekly, Thomas. Right.
Okay.
So my comment is still valid.
Okay. Eric, comments?
Uh, okay, this time frame is a bit too high for me. So okay, clearly from a supply and demand perspective, I don't think this is the right time to trade. Yeah, so it's a lot of waiting until there are more information now.
Agreed. Okay, let me explain how I trade. Some of my students, some of you have saw my video about multi-channel analysis, correct? Remember, there is a major support level zone over here. What you call Dr. Fu said congestion supply zone. I call it what you call a noise zone. This is the resistance zone level. Okay, remember you are looking at running into the previous month's resistance zone level, so it's much harder to trade. Of course, if you are buying physical copper, then different ball game. Okay, so your objective is depends what your objective is. I'm not so sure. You say weekly cycles, I think is a bit scary lah. Okay, anyway, let's go back to stock and shares.
But Thomas,
The answer is no. I will not. I will not ask you to take a near classical support position. You expect it to bounce? I
Thomas,
think it's a bad idea. You expect it to break through? I even if yeah, you can scalp lah up to 420 level lah if you want to. Anyway,
Thomas, can you show a day?
this one
can-
is not very
Tom-
worth. It's not worth time
Thomas
effort.
can
Let's be
show
honest.
hourly chart, can not?
Okay. Anybody got US companies or forex pair? Any sort? And by the way, Mr. Yang, you never tell me your duration. You never tell me your budget. Okay? If you want to trade, you will not trade with $5 million is different from trading. You trade for $50. Okay? Okay lah, extreme lah. Hey, that is Corox eh. Okay lah. Somebody went to Corox eh. That night we already clear Corox already. Okay, wait. Let's look at Euro USD first. In honor our forex friend here, forex guru here. Okay. Wow, wait. Let me delete all the nice. Okay, ladies and gentlemen, as you can see from here, I've been trading euro for you can see literally all my cluster nice here and there. Okay, let me let me go and clear for you all. I've been trading forex. Okay, sorry Let me. Some other people say I'm option trader. No lah, I trade everything as long as opportunities. And you notice this is trading long time, my man. Okay, let's inside here. So now, who asked for Euro USD? So, Berg, what is your objective? Tell us your objective. Your objective, your resources. Okay? Doctor currency is your special, your one of your favorites. Comments on Euro USD?
Thomas, I can't see your chart very well. For the simple reason is I don't know whether this is a daily chart or whether it's a 4-hour chart.
It's a daily chart.
It's daily chart.
It's a daily chart. Okay, can you show me the last swing? Cannot.
Swing box.
From yeah.
Yeah. Wait, let me delete all the nice. Yeah, don't look at daily chart patterns now.
Okay, USD, Euro USD is actually trying to form a support level, right? Which I believe it's 1.17, I think. That will be the
1.175, yeah.
I think that will be the 1.17 will be what we call a big number level. So when it hits 1.17, most likely there will be a rebound because that will be what we call a big number resistance level. Okay, right. So that will be a level that you need to watch very closely, right? And looks to me like that will be a very strong demand zone for you to consider any future trades. Because fundamentally euro is quite it's quite strong, compared to USD, right?
Yeah, I agree.
Because euro economy is recovering very fast, whereas US economy is very stagnant now. Okay, lah.
Okay. Any more questions, anybody? Any more questions, anybody?
No.
Can everybody hear me now?
Yes.
Any more questions for Dr. Ho? Clorox, Anga, we went there before, no change. No change, Anna. Anybody want panel discussion? Last question. Now it's already almost 5:07 already. Those who are interested in the live US market session, do register. Now let me go back to the chat. I click down here. For those, somebody asked for income class. I got advanced income practitioner master class. Okay, this month, drop me a message if you're interested. Anybody got any questions? If not, let's end today's session. Those, I put the thing out again for tonight. Okay, for those interested, you want to know about US equity market, drop me a message. Those who are interested in Eric's slides, Eric like how to trade, Eric like style, drop me a message. I can able to persuade him to do a short class for you. Okay, Dr. Fu has upcoming trade naked class also. Okay. Tonight, okay? Yen also the same. Drop me a message also if you're interested in it. I got this Wednesday, I got low entry $1,000 class for the rational class. Entry
Thomas?
level class. Not very much.
Thomas?
Income is no longer considered entry.
Thomas?
Of course, we are traders, Mr. Yang. How is your trading? The Yang, the serious trader, ask for copper and things. This guy is a. Okay, thank you very much. Feedback needed. Thank you. Let's end today's session. Thanks, Dr. Fu. Dr. Fu, Friday afternoon, let's go for lunch.
Yeah.
Chasing for the duck.
Yeah.
Okay.
Angie asking about the Beijing duck.
I'm not the one that into the one.
Yeah, I think we really miss the Peking duck, right?
Something wrong with my speaker. Your speaker, how any background sound?
Huh?
Speaker okay.
Where?
Speaker okay lah.
Got me?
Okay, let's end today's session. Hello. Take care and be safe.
Wow, Eric, the one a lot of questions.
Because why new Bruce?
Yeah, nice.
Eric, new Bruce 16, you know, okay?
You should contact a